owners within just a short time period. For that reason, of course, it took a lot of time to update the let's say the shareholder books for businesses, and then of course to proceed with the payment, etc. Okay, so we will talk, as I said, with the let's say the process of distributing dividend and the accounting, of course, for that distribution. Okay, so it said that few companies are likely to pay what? Few dividends in amount, because it is generally to be equal to or less than their legally available retained earnings. So why? The question here is that, when we distribute dividends, well, really the distribution of dividends, it's not like we will just wait or from our net income that will be distributing dividends. So remember when we made the closing entries in the freshman, what we did? We distributed dividend from what? From the retained earnings account, okay? So that's of course how it all businesses, of course, those that they want to distribute dividends, they will be using their retained earnings account to distribute the amount of dividend, of course, they are entitled to. Okay, so the question here is that it's not really possible for most of firms to distribute all their legally available retained earnings. Okay, I don't know. Do you have an idea why it's not possible to, let's say, to use or consume all the retained earnings as a distribution of dividend? Because after all, distributing dividend is also important for firms in capital market. That will give really a good signal to investors, potential, of course, investors, and to shareholders, etc., that this is, let's say, a successful firm, a firm that is, let's say, respecting its commitment toward shareholders. So they are really, let's say, attracting more shareholders by their dividend policy, because they are really rivals on capital market and they are competing for funds. So maybe most successful firms will be those that they are or they have this frequent distribution of dividends. So the question here is, if we, or this firm will be distributing dividend every year, let's say, they will be using up their retained earnings. Okay, why we cannot distribute dividends? Of course, let's say if you got, I don't know, 100,000 as retained earnings, you can, for example, distribute it entirely. Can you have an idea about that? Did you talk about dividends in finance in one of these courses? No?
Yes, a little bit in the corporate finance.
Okay, so what was told about? Can you tell me?
There's a chapter called, I think, called the distribution of dividend, and we talked about how, like, investors react to shares and different distribution policy.
Okay, so more about the effect of distribution on, let's say, market or shares liquidity, shares movement on capital market, if I understand.
Yes, exactly.
Yes, okay. Now, here when we talk about distribution of dividend, and of course from the accounting perspective, we'll be talking, let's say, from an internal perspective, meaning so internally as a firm, how they will be thinking their dividend policy and how they will be processing, okay? So the answer, of course, for that question is that, yes, not all the companies, maybe most of the companies won't actually use up all the retained earnings, so meaning all, let's say, the reserve available in the retained earnings to what? To distribute dividends to, let's say, satisfy their shareholders and potential investors, of course, to track them, etc. So why? We have really a number of reasons, okay? So the first important reason is that there are maybe, for those, of course, firms that most of firms, they are borrowing actually money from banks, okay, or from creditors in general. So have this debt component that will, what we call, restrict the use of retained earnings for the purpose of distributing dividend. So as a creditor, I will require, for example, that a portion, maybe the entire, or let's say a portion of the retained earnings will be what you call appropriated. What do you mean appropriated? Will be restricted to the distribution of dividend. So you are called under this debt agreement, you won't, for example, use 50,000, for example, 100,000 in the retained earnings. So you keep it, let's say, as a reserve, because that will be, let's say, kind of entre guillemets, collateral for banks or creditors, of course, to make sure that they will be able to receive back their money once, of course, maybe the business is not well functioning, etc. So they try to make sure that they will receive back their money. So they have to get guarantees, and one of these guarantees is that the retained earnings will be kept as it is. It won't be used in distributing dividends. Okay, so that's one of the important reasons why we cannot use the, let's say, the entire funds available in retained earnings, of course, to distribute dividends. Okay, the next is that to meet corporation requirements. So again, when we distribute dividends, it will be most likely, and it's not most likely, it's certainly, it will be just considering the outstanding shares. Okay, while for businesses, for example, you have the treasury shares that you reacquire it back. Okay, so you should keep, let's say, the amount that will be equal to the cost of the treasury shares in terms, of course, of retained earning, not to be distributed here to meet these corporation requirements. So this is, let's say, a legal restriction toward not using a portion of the retained earning that will be equal to the cost of treasury shares, of course. So do not touch it, do not use it, of course, in distributing dividends. Okay, so that's another reason. The third one, it's more, let's say, economic reason. So businesses may use or may need these resources, these funds available to finance their growth and expansion, etc. Okay, so of course it will be, let's say, less onerous, meaning so it won't be expensive for them to use the internal funds. So rather, just imagine they will be distributing this retained earning and just calling for banks, of course, to borrow money for expansion. So it won't make sense. Of course, if we have enough funds, of course, it's better that we'll use these funds, of course, to finance growth and expansions, etc. And then, of course, they will have to just postpone the payment of dividends to the next years when, of course, after maybe expansions, or when they have, of course, enough funds to finance any dividends distribution. Okay. Another also important reason financially here talking is that to smooth out dividend payment. So what do you mean to smooth out? Do you have an idea? No?
No.
Okay, so when we say to smooth up, so just imagine the situation. ديما ارجعوا لدي اللي businesses, the best position for firms is that they will be, let's say, distributing dividend every year. But imagine that, of course, maybe 1-2 years, they got really important net income, so higher, of course, very high retained earnings, of course, and they were, for example, they had the possibility to pay, let's say, important rate of dividends more than 10%, etc. And the next years, for example, there was a drop in their activity, and still they can, for example, manage to pay dividends, but they will be paying dividends, for example, at 5 or 6%. Okay, so here the really big difference between both rates will maybe also it will be an issue for businesses, of course, in capital market. It will be, let's say, a bad signal to capital market, because used to pay 10, 12, or 15% of your, of course, as dividend rate. Now you are just paying 5 or 6. So this is just saying that you are not well-performing firm. You have maybe problems, etc. So one of the maybe solution to this, let's say, volatility in earnings and volatility, of course, in the amount to be paid as dividends, that they choose actually to what? To keep the same dividend rate. Even if I can, for example, ensure paying dividend of 15%, I will just pay 10%, of course, and this, let's say, 5% that I can additionally, for example, pay, etc., it will be kept, of course, to the next period when I cannot really handle paying 10% of dividends. So it will be, let's say, like a cushion for next period or for other periods where it's not really possible to pay the same level of dividends. So why it's important? Because smoothing dividends payments. So this is just an indicator of what? Stable business, well-performing business, so businesses that they are really keeping the same, let's say, pace of growth, pace, of course, of earnings, and also pace of dividends payment. Okay, so that's really important because, as I said, you can really 1 year enjoy a high rate of dividend, but the next one or the after, there will be substantial drops. Just imagine the situation of COVID, and with all of this, for example, I don't know, entertainment firms, or for example, cinema or whatever, which because of the current time, they maybe incurred losses. So imagine that there before COVID year, they were paying for 10%. Now, of course, they are making just losses. Okay, so they cannot even be paying any penny for dividends. Okay, so paying not, of course, the entire ability, of course, of or what is available in funds will be also a way out when you are really in bad situation, in, let's say, a bad period or a bad year compared to early periods. Okay. Another also possible reason is that also firms will be always thinking about the future. And, when we retain earnings, it's not only about just thinking about the expansion or using up this money for business, of course, internally in the operating cycle, but also we are thinking about any possible losses in the future, and we need actually reserve, we need a cushion to, let's say, to serve as an important support in situations when, for example, I'm just struggling to get, let's say, to have funds, for example, to pay for that, for current, of course, liabilities, or for other business operations. So, these are, in general, most of the important reasons why, of course, for businesses, paying policy is really, dividends is really, paying dividends is really important for shareholders, for potential investors, so for attracting funds in capital market, for even the cost of capital, because when you pay dividend, when you show up that you are really well performing, you may have access to these funds with low cost of capital. But at the same time, you should not also be incurring or bearing a problem because you are just not having enough cash in for the future. You are not, for example, respecting the debt covenant. You are not meeting the corporation requirement. You don't have the possibility to finance any growth or expansion, etc. Okay, so as a firm, they should, of course, think about all of this stuff, but of course, in addition to trying to keep this dividend policy from 1 year to another, of course, as stable as it is possible. Why? As I said, because it's possible. It's important for the market position for these firms. Okay. So that's from one perspective. Let's say when we talk about legally or even economic aspect of the dividend policy. But now we're also talking about the financial condition. So meaning dividend policy is also influenced or impacted by the financial condition of the firm. So it's not only about legal, for example, conditions like, as I said, debt covenant or corporation requirement, law for corporations, for example, or the economic situation, for example. So the future, meaning cushion for the future, for any possible loss, etc. But also, as a manager of that firm, I should also think carefully about, of course, how much I can bear as payment of dividends, especially, of course, taking into consideration my financial condition. Okay, so when we say financial condition, so it is in particular about the availability of funds. So now, of course, when we talk about, let's say, paying cash dividend, okay, so imagine that you got, for example, important amount of retained earnings. You have, of course, your equity, and you got in the asset, you have only plant assets, so you don't have really cash available to pay a portion of this retained earnings, of course, as dividends. Okay, so what would be the solution for that firm? So the only solution is that they will have to sell some of this plant asset to what? To distribute dividend. Okay, so which is not really a good, let's say, signal to capital market, because you are just disposing of your plant asset to pay a dividend. Okay, so the rule here for businesses, of course, they cannot really bear any payment of dividends unless both the present and future financial position warrant the distribution. Because even if they got cash, for example, imagine we got, I don't know, $50,000 in cash. Okay, so we cannot really say that, well, we have retained earnings of $100,000, we have $50,000 in cash, so let's just distribute $25,000. Okay, so we cannot really warrant this distribution of dividends unless we are, let's say, pretty sure that we don't need this $25,000 in what? In paying the current liabilities and other operations within, of course, the operating cycle, like salaries, like any taxes, like any other present obligation, of course, that will be paid in the near future. Okay, so it's important that we make sure that we have available funds, available cash, but at the same time, if this cash will be used in the current and, of course, in the near future to pay off some debt, of course, or to just pay creditors and salaries, etc. Okay, so that's really important. So you can really see that paying dividend, or the dividend policy, is not really simple. It's rather complicated because this even though you are just distributing, assuming one dinner to every share, but imagine that you have 100,000 of shares, so it will be costing you $100,000, okay, or dinners. Okay, so that's a lot. And of course, you should make sure that it won't impact your financial position. It won't really cause you any harm. Okay. So that's briefly, in general, of course, let's say what are the main factors that are likely to influence the dividend policy for businesses. Okay, so it's not, as I said, a simple process. It should be well thinked. It should be well founded, of course, on the availability of funds, and also on, of course, these funds that they are maybe not needed, of course, in the current or the future periods for any of these reasons, like expansion or preventing any loss or whatsoever. Okay, so is that clear, please? Talking to you.
Yes, it's clear.
Okay, good. So so now we'll be discussing actually the different types of dividend distribution. And of course, as accounting, we'll see how we will account for any of these decisions. Okay, so if I, as a firm, for example, I will decide to pay cash dividend or property dividend or liquidating dividends or share dividends. So what will be? When to recognize? Again, remember always that. So when to recognize, and of course at which amount. Okay, so you should just keep in mind that all these dividends payment, of course, policies, except the share dividends, will reduce the total equity in the corporation. Okay, so it's obvious because you will be either using retained earnings, let's assume retained earnings for at least two of these policies, or any other type of equity when we talk about liquidating dividends, and this will be discovered later on. So for these three types of dividends, there will be reduction, decrease in the total equity for the corporation. So only share dividend that won't actually decrease the equity because it's a matter of reclassification. Okay, we'll discover these policies one by one. Okay, quickly. So what is a cash dividend here? Okay, so let's say again, when to recognize it, what will be the account, for example, use it to record this decision to distribute cash dividends, and also what will be the value, of course, how we measure that. Okay, so you should know that, of course, we cannot talk about any dividend payment, of course, in the near future, if there is no declaration made by the board of directors. Okay, so here we should have an assembly. There will be a resolution where, of course, they are voting for on the declaration of cash dividends. So they will be voting, they will be declaring the payment of cash dividends. Okay, so once we got this declaration of cash dividends in the board resolution, so it's considered to be a liability. So once declared, this cash dividend is now a liability in the business account. Okay, so firms should or must recognize it as a liability because they are already declared by board of directors. Okay, also it's important to mention that there is, of course, no declaration or payment of cash dividend on treasury shares. You know why? Because they are no longer outstanding. Okay, so they are issued but not outstanding. Okay, so reacquisition of treasury shares will make them, let's say, under the property of firm itself. So there is no payment of dividends or any other of course payments. Okay, so to account for this cash dividend, we should consider actually 3 important dates. Okay, so we have the date of declaration, the date of record, and the date of payment. And why, of course, we have these actually 3 different dates? Because, or let's just say why, for example, from the date of declaration, we just need to make another step until we will be paying. So why we cannot declare and pay, for example, the same time? Okay, so simply because, as I said from the beginning, so once declared by the board of directors, so it's up to the, let's say, the managers or some of the officers of the firm to what? To proceed to updating the shareholders record. Okay, so they need to have all the details about the actual shareholders of the firm, maybe the late ones, etc. And then, of course, after, of course, establishing all this record, they will proceed with the payment. Okay, so there is, let's say, always a gap between, of course, the date of declaration and the date of payment. Of course, it's not really very long, but it will take maybe 1, 2, 3 months before it will be paid in cash. Okay, let's see an example with this dividend policy and this cash payment. Okay, so here we have Redway Freight Corporation that on June 10 declared a cash dividend of 50 cents a share on 1.8 million shares payable July 16 to all shareholders of record June 24. Okay, so here we got actually these 3 dates. We have June 10, it was the declaration of cash dividend. Shareholders records should be done on June 24, and then, of course, the payment will occur on July 16. Okay, so accounting, of course, in terms of accounting, what will be, let's say, the accounting records in these different dates? Okay, so we see. Remember, we said that the date of declaration, once declared, we got what? We got a liability. So it should be recorded as a liability. Okay, so we got to record the distribution of cash dividend as a liability. So do you know what will be the account, for example, used to record June 10 this declaration of cash dividend? Do you have an idea?
Retained earnings?
Yes, so we'll be using retained earnings. And what will be the account, the other account?
Dividends payable.
So it's good. Here we got this liability of paying, of course, dividends. So we will debit retained earnings. So how we know this 900,000? So it's simply 50 cents, of course, multiplied by 1.8 million shares. So that's the 900,000. So it will be debited to retained earnings and credited, of course, to dividends payable. Okay, so that's the date of declaration. So now at the date of record on June 24, what will be the journal entry? Can you guess?
Nothing.
Good. So here at the date of record, there is nothing to make because it just, as I said, it's an internal process where we will just be updating the list of shareholders, the new ones, of course, and of course, getting all the details about the shareholders, those that there will be receiving this dividend, this cash dividends. Okay. So at the date of record, nothing to be recorded, and then at the date of payment, so simply here we should what? We should credit cash and debit, of course, dividends payable. So there is no longer liability because we already paid off this obligation. Okay, so we have this debt toward our shareholders that we just paid off with using cash. Okay, so this is just a simple illustration of a cash dividend with the different timing here. As I said, the date of declaration, the date of record, and the date of payment. So this is how we first declare. So we just need to recognize it as liability, and then of course when we pay it, we just need to reduce our cash and also our liability. So this is about the cash dividend. So let's see now. So later on, we'll get in appendix, of course, how we measure this amount of more, of course, more complicated measurement of cash dividends. In particular, when you got two types of shareholders, so preference shares and ordinary shareholders, and of course with also different rates of dividends. Okay, we also see the different situations when we have what we call dividends in arrears and so on. Okay, so just here we're just covering the basic, and we will go in the appendix later on. Okay. So now imagine, of course, and it is possible that businesses may use up other type of assets as a distribution or as dividend, of course, to be distributed to investors. Okay. So when we call it property dividends, so simply because they are what? They are asset that is other than cash. Okay. We can use building, we can use land, we can use, I don't know, equipment, and any other type of asset that is not cash, and it will be used, of course, as a dividends payable. Okay, to shareholders. Okay. So here we have actually we'll be careful about the process, because when it's about property, meaning maybe building or land or whatever, or equipment, we should what? We should first of all restate, let's just say, the book value of that building or that property in general should be restated or revaluated to the fair value. We should also recognize any gain or loss because of that revaluation, and then of course use it, of course, as a distribution of dividends. Okay, so we'll see, of course, with an example. Okay, so as I said, these are the rules. It should be restated at fair value. Then, of course, it should be used, of course, as a distribution of dividend. Okay, so we got here this illustration of TEN that transferred to shareholders some of its investments held for trading in securities costing. So here you see it's a financial asset, so they have some investment. They are held for trading. In chapter 18, we'll be discovering this investment. Okay, so you got investment in some other securities. They are held for trading, meaning, of course, they are short-term, let's say, securities. They are costing 1,250,000, and of course that's the financial asset that will be used, of course, as a dividend. Okay, that will be distributed as dividend. Okay. The firm here declared what? A property dividend on December 28 to be distributed on January 30 to shareholders of record on January 15. At the date of declaration, the security has a fair value of 2 million. So you see here the book value or the cost, let's say, or carrying value, in particular here, of this security, it is 1,250,000. January, at the date of declaration, so it was on December 28 here. The fair value of these securities, it is 2 million. Okay, so remember the important rule for this dividend, property dividend, is that we should what? Restate this property to its fair value. Okay, so you see here when you compare the carrying value with the fair value, so it's obvious that we have a higher fair value, so it's more gain here. Okay, we have $750,000 to be recorded as gain. Okay, so here we should debit what? Investment or equity investment here, because there are securities here, investment. So we have equity investment to be debited by 750, and also unrealized gain. That is, of course, an income account here to be recorded 750. علاش it is an income account? Because they are held for trading. Okay, احنا in the next chapter we'll be talking about investment, but we'll be just covering just half of the chapter. We'll be just talking about debt investment, equity investment, because they will be covered in the senior level when we'll be talking about consolidation, etc. So we won't cover inshallah. We don't have really enough time to cover the entire issues in accounting. Okay, so as I said, we got first to what? To restate the property here, the securities, to their fair value. This is what we did. So we debited equity investment. We recorded unrealized gain or holding gain or loss here. That's an income account. Of course, when we crediting, so meaning here it's a gain. And then we should what? Distribute this equity investment, of course, at the date of the payment as dividend. Okay, so it should be first of all retained earnings, property dividends payable. You see here. So we got debiting retained earnings and crediting property dividends payable. That's of course to what? At the date of declaration, to recognize this liability of property dividends payable. Okay, so remember, we always of course pay any dividends from the retained earnings. So that's the basic, or in normal situations, of course, we'll be using retained earnings for any payment of dividends. Okay, and then at the date of distribution, we simply what? Credit the liability, but also credit the security here, the equity investments. You see here. So that's at the date of the distribution. So remember again, at the date of declaration will be what? Will be debiting retained earnings with the amount of dividends payable. That's a property, dividends payable. And the next at the date of distribution, so we simply what? So we will take off our liability. We also take off the equity from our books, because equity investment, because they are what? Use it up as dividend here to distribute to shareholders. Okay, is that clear, please?
Yes.
Okay, good. The third type here of dividend, this is what we call liquidating dividend. Okay, and simply put here, we will consider any type of dividend that is liquidating if it is not based on earnings. Okay, if it is not based on retained earnings in particular. Okay, so here we'll be using what? For example, some amount that are paid in by shareholders. Okay, just think about the share premium. That's why we call it liquidating dividend, because it will be, let's say, using the paid in capital here, the paid in by shareholders to distribute dividends. Okay, so any dividend not based on earnings, on retained earnings, on net income, etc., it will be considered as liquidating dividend, because we will just use share premium, for example, to distribute this kind of dividends. Okay, so sometimes, for example, we are deciding to distribute important amount of dividend. We don't have enough funds on retained earnings, so we'll just pay the difference, of course, from the share premium from the paid in capital. Okay, so here's the example here. McKinsey here Mines issued a dividend to shareholders of 1,200,000 pound. The cash dividend announcement noted that shareholders should consider 900 as income and the remainder as a return of capital. You see here, so we cannot consider the entire 1,200,000 as dividend, because when it is paying or using the paid in capital by shareholders, so this is a return of capital, not dividend distribution. Okay, so at the date of declaration, again, will be what? Using retained earnings for the 900, and the difference in 300 will be using the share premium here, ordinary. That's the additional paid in capital in excess, of course, of par. That's the account that will be used to liquidate dividend. Okay, to liquidate or to pay off dividends from the paid-in capital, okay? And of course, we will record this liability of dividends payable of 1,200,000, okay? At the date of the payment, so simply, of course, you will debit liability and you will debit credit also cash for 1,200,000, okay? So that's when we use the entire maybe funds available in the retained earnings, but we still need additional funds to finance this dividend payment. So we will just use up, consume the paid-in capital, which is really not a good decision, huh? And you have seen that investors should be informed about it, okay? So as it is said here, it said that they should consider only 900,000 as cash dividend, and the remainder will be a return of capital. So still you'll be receiving cash, but it is it is a return of some of your capital will be returned to you. So you'll see that, of course, you have reduction in the paid-in capital, not only in the retained earnings, okay? So the last example of any dividends payment here is the share dividends, okay? So businesses may also decide to distribute dividends. Remember, you just, for example, to avoid any tax payment, because in some countries, many countries may levy some taxes on cash dividends, okay? So one solution to that is that firms may decide to issue additional shares, of course, as dividend, and it will be, of course, proportionate, of course, to their level of ownership within a firm. Okay, so this is what we call on a pro rata basis. So meaning it will be proportional to their level, or how much, of course, they are. What will be the percentage if they are owing 10, 5, etc. percentage? So it will be respecting this pro rata, of course, without receiving any consideration. So meaning there will be shareholders will be receiving, let's say, additional shares for free, okay? So that's how we distribute share dividends, okay? So when we got to distribute share dividends, of course, will be will be increasing the share capital ordinary, okay? So here we'll be using the par value, not the fair value, to record this share dividend, okay? So be careful. Of course, the issuance of shares, any shares, of course, on capital markets, they have their fair value and their par value, okay? So their selling prices, their par value, they are different. So when we record the dividend distribution as shares, of course, you should use the par value, not the fair value for that share dividend distribution, okay? So what is important for this share dividend distribution is that it won't affect any asset or liability. You see, for example, we cannot really get, for example, any, I don't know, use up of cash or any other type of asset, okay? So there is no effect on any asset or any liability. For example, there is no additional, for example, we are not, let's say, borrowing additional money to pay or to distribute the share dividends, okay? Even, of course, within the equity here, there is no reduction, as we said, only share dividends, so it won't be reducing the equity, because it will be an issue of reclassification. What do you mean by reclassification? Remember, we pay always, or let's say at the date of declaration, we recognize this distribution of dividends by by reducing the retained earnings account. So now if you will be reducing the retained earnings account, it will be, of course, increasing the share capital ordinary, okay? So here we're just reclassifying from a retained earning to the other equity account to the share capital ordinary. That's why it won't really reduce the equity or impact any asset or liability account, okay? So we got, of course, this ordinary share dividend distributable that will be reported in the equity section as an addition to the share capital ordinary. As I said, it will be added to the share capital ordinary under, first of all, of course, the dividend distributable account, okay? So let's see with the example here. Vine here has outstanding 1,000 shares of £1 par value ordinary shares and retained earnings of 50,000. If VINE declares here 10% share dividend, it issues additional shares to current shareholders if the fair value of the shares at the time of the share dividend is 8 per share. The entry will be what? How can we account for this declaration of share dividends? Okay, so it said that we got what, 10% of share dividend. Okay, 10% of course should be 10% of the par value of the already 1,000 of course outstanding shares. Okay, so it should be what? It should be of course بلي هنا just انا قبيلي صلحتها مي just give me one moment because I should just insert the amount. They are not correct. Voila, 10%. So yes, that's good. Okay, so just keep it. Okay, so go back to this illustration. So as it said, the firm has outstanding 100,000 of shares with £1 as par value. They got what, 50,000 as retained earnings, and it said that if the firm is declaring 10% of share dividends, so it will be showing so 10% from this 100,000, so it will be 10,000 additional shares to current shareholders. So this 10,000 as additional shares to the current shareholders, how we account for it at the date of declaration? Should we use the par value, which is £1, or the £8, which is the fair value of the share dividends, of course, at the time of the declaration? What do you think?
The par.
Yes, we're using par, so we simply what? Debit retained earnings for 10,000. So again, so this 10,000 additional shares times the £1 here. So that's the 10,000. And of course, we credit ordinary shares dividend distributable. Remember, we said that will be added, of course, to the share capital ordinary account. Okay. So that's at the date of declaration. At the date of distribution, so we're simply debit again this ordinary share dividend distributable. So that's just an intermediary account, and of course we credit share capital ordinary. So you see here there is no asset, no liability that is involved with this transaction of paying share dividend. Okay, so all it's about that we are just taking 10,000 from the retained earnings, and then of course adding this 10,000 to the share capital ordinary. So here after this transaction there is no change in the total equity. Okay, so total equity is the same. Is that clear, please?
I have a question.
Yes, go ahead, please.
Okay, like for example, I'm an investor and I want to know whether the shares I'm going to buy will give me annual dividends, or simply I'm going to, for example, like invest, like I'm a new investor and I like that the capital of the company will bring me another shares in further years. So I don't like to receive dividends in the first years, because we studied the corporate finance. How do we choose like companies in accounting terms? Does the company declare how are they doing with the dividend policy?
Yes. So, you know, when you have, for example, you'll be investing in one firm, you get, for example, their annual reports. In their annual reports, you will find entire information about their dividend policy. What is, for example, for ordinary shares, what will be the rate for, they use it, of course, to distribute as dividends, and also their policy, meaning, for example, if they are frequently distributing dividend or not. And for example, if they just distributed, for example, in the last couple of years, and now they, for example, retain it or stop it distributing dividends, so what are the reasons? So all of these details will be finding, of course, available in, let's say, in the annual report, when you have, for example, the vote from the managers or the board of directors, and even if you find that, of course, I don't know, dividends account distributable or dividend payable account, etc., you got a notes disclosure, additional details about that. Okay, so all what you need about the dividend policy of that firm, you'll find it in the notes disclosure and also in the entire annual report when you just read it. Okay, you know, you have 100 of pages. We'll be talking about the entire, let's say, life of the business, of course, that was in 1 year, and of course its prospected, its future. You can read, for example, that the firm is saying that we will stop paying dividend for at least 3 or 4 years ahead because we are engaged, we have a new project, we may, for example, need to expand, etc. So all of this stuff, you will find it explained. You will find, of course, with all the details about their projections, about their anticipation, forecast, etc. Okay. So this is, of course, how, let's say, listed firms, of course, in really developed يعني capital markets, they are doing. Okay, donc ما نقيسوش احنا على تونس. Bon, even in Tunisia, you can find, for example, as I said, assembly resolution that they are also declare it or disclose it to shareholders and to any, of course, interested party, in particular ordinary assemblies, of course, with the information that should be or can be, let's say, read by public يعني opinion, etc. Okay, so you found يعني احنا في تونس par example we used to get ما نعرفش توا ما زلت تعملها كيكه ولا لا، خاطر انا وقت ليبوك كنت نقرا we used to كما قلت بخاف الفينانس وقتها حتى الاكاونتنج كان يقول لنا just read la presse في تونس في البيريود باغ اكزومبل اديانت في ديسمبر وذن بعد حتى ديسمبر دونك في البيريود هذيك entre ديسمبر وجانفيي ديجا ديسمبر 31 you'll find some of the financial statement of some of firms published in la presse, d'accord, even the assembly resolution, etc., regarding the dividends policy, dividend payment, etc., you find it, of course, in la presse. So this is just a way to communicate with, of course, shareholders and potential investors. Okay. But now, of course, أنا أحكي لك أنا ذيك الإيبوك يعني توا bien sûr you just go on website of that firm, you just download their annual report for the early period العام اللي قبل والعام اللي قبل, etc. You will read, of course, how they are dealing with the investors, the return on investment, of course, the payment of dividend, all of this stuff. You found it, of course. Just try the fact that you will consult an annual report of one firm, just really one big firm, and you will see, of course, how much, of course, extent or how much information that is provided really. So financial statement باش تلقاهم at the end of the annual report with their no disclosures. But before that, you may find just 80 pages talking about all the other issues like كما قلنا donc prospective, environmental, social responsibility, risk management, so technology, maybe human resources, all of this, of course, information, you'll find it in annual report. So it's not only about financial information, but also other non-financial information, you can find them there. Okay, so as an investor, you just need to read. You will be reasonably informed about, of course, their strategy. Okay,
thank you. I will make my research. Just Mariam has asked a question. She told you, Miss, can you please explain liquidity dividend again in a simple way?
Okay, I'll just read it. Okay, so liquidating dividends is simply the situation you just need to maintain, for example, I don't know, your available shareholders. You even maybe trying to attract more potential investors. You are making an effort to maybe to increase your share price on capital market, etc. So you cannot really bear at this moment any reduction or any decrease in your dividends payment rate. Okay. And the situation, of course, why you are just thinking or figuring out if it is possible to reduce it or not, because used, as I said, use it to example, to pay 1,200,000 or let's say 10 or 12% of your, of course, ordinary shares here, par value, of course, as dividend. Okay. The problem is that you didn't, for example, realize enough net income, so you don't have enough fund in your retained earnings. So imagine you have to pay 1,200,000 and you have only 1 million in retained earnings. Okay, so the problem is that you have to trade off between two situations. You just need to, for example, to reduce your dividends rate by to 200,000 this amount, and just telling, of course, investors that you are going through, let's say, not bad, but low performance compared, of course, to the prior years. So here, and when we talk about low performance, even the manager position will be at the stake, because it means that he's not really well performing. He cannot maybe have this agreed upon or forecasted growth, etc. So it will have really consequences on, as I said, the financial position in capital market, on even the position of managers, and so on. So some of them, maybe they found the let's say, after declaring the payment of that amount, etc., they can see that there is no enough, as I said, fund in retained earnings. So the solution, what will be the solution here? I will use up some of my paid-in capital, some of my excess paid-in capital, because remember, when we sell our shares, this is what was discussed in the last session. We got the selling price, we have the par value. Remember, we call the equity, the share capital ordinary, at par, and the excess between the selling price and par will be recorded as a share premium. So this is what you call paid-in capital, because it is, after all, what? Contribution made by investors, okay? So here, you are not, when we talk about liquidating dividends, you are not using as a basis for this payment of dividend your earning, what you already realize it as, or earn it as earnings, and of course as net income, and of course retained earning. Some of it will be covered by this earning, but also a portion you will need to pay additional dividends, and for that reason you need to use that to consume a part of your capital. So that's a consumption of your capital. This is what we call liquidating. So you are liquidating capital. You as if you are just returning back. Well, as if it is actually. So you are returning back part of the equity to the investors, to the shareholders. Okay. Now هنا يعني احنا shareholders عنده, for example, I used 200,000 from the share premium, okay, متاعها. يعني انت equity كانت, I don't know, 2 million ولت 1,800,000. You see here? So هنا we are liquidating, we are returning back to the shareholders a portion of their paid-in capital, a portion of their equity. Why? Because, as I said, because this is a problem when we don't have enough fund, of course, regarding this dividend policy payment. Okay, is that clear, Mariam? Okay, great. So another here issue that we'll be talking about, it's about share splits, okay? And why just talking about share splits right after share dividends? Because of course, let's say the logic behind, of course, these two transactions, it's different. But the effect actually on equity will be the same, okay? So we'll see that, okay? So here, what is a share split, okay? Or share split, this is simply, of course, when you have to reduce the market value of your shares, okay? So you will, for example, you got 100,000 of shares at €1 par. After the 2-for-1 split, so you get what? You will multiply the number of your shares, but at the same time, you'll be reducing their par value, of course, to the half. Why here we're talking just about the example of 2-for-1, okay? So why we use it? Okay, so we use it sometimes, of course, to make, let's say, our shares accessible on capital markets. يعني انت ما نحكيوش تو هنا على, I don't know, تو كي واحد يبدا عنده 1 euro par, يعني we can assume that, I don't know, the selling price قديش ما يفوتش مثلا 100 euro في R, يعني the most optimistic, let's say, position. But imagine, for example, I don't know, for big firms معاش أنا كيما جوجل أنا معادي بها قديش عندها $1000 اللي هو ال price the selling price of its shares okay but if for example we assume of course it is hypothetical هنا if Google for example want to boost the selling for example of their shares, so they want to increase for example the capital etc, and they want to boost of course the purchase of their shares okay to make sure that they have for example the maximum of course to collect the maximum fund in really rapid way. So the most appropriate way maybe is that they will be splitting their shares. So with what, with this idea that of course when we will split 2-for-1 or 3-for-1, so here we will just divide by 3 or by 2 and this will be reducing the market value and of course the par value of the shares. Donc هنا كما example 1 euro par value will be what, will be 50 cents, or if it is 10 it will be $5 etc. okay. For this share split transaction here, it's capital market of course transaction, and it's يعني it happens a lot. Sometimes of course we can just make this, as I said, procedure only for example to as I said, to make it for example to make كما قلنا market for your shares, so you have to just increase for example the acquisition of your shares, so you'll be just reducing the market value, so the selling price, and also of course the par. So that's one of maybe the important reasons to proceed with that share split. Okay, so why for that share split on accounting, and from an accounting perspective, it said that there is no entry needed here. We won't record for share split because simply there is no effect on none of the equity account. So share capital ordinary still, if you see here with the example provided here with the illustration, share capital still always 100,000. Even though we have now more 200,000 shares at not at €1 but at 50 cents here a par. Okay, so still at a total here the share capital ordinary is still 100,000. My retained earning, of course, it wasn't impacted, and my total equity is the same. Okay, so there is no effect, let's say, on the financial position of the firm. Okay, nothing changed, neither asset nor liability nor equity. And of course, in here كده على share split, it's more about the equity section. Okay, so equity section is not impacted here. Okay, not even a reclassification, because remember for share dividend here we had reclassification, so we needed, let's say, to use journal entry to proceed with this reclassification. So for the share split there is no reclassification, so it's only multiplication here of number of shares, at the same time reduction in the par and the market value for that of course firm and their number of shares. Okay, so this is what I just said. We just decreased the par value and increased the number of shares, but at a total the share capital here ordinary will be the same. Okay, okay, so قلنا please احنا the كامل علاش we presented them of course just right after share dividends. علاش؟ على خاطر قلنا after all, when globally when we distribute share dividends there is no effect on the equity, so total equity will be the same, but the reclassification will be, for example, هنا rather than we got كان نحسبوها هذه distribution of share dividends, rather than we got retained earnings for example of I don't know 50,000 باش تولي تقعد هذه 20,000 والshare capital it will be 130, and then in total it is 150. Okay, so after all my equity is the same, so there is no difference. But of course there are other differences regarding the two of course processes. Okay, donc كي نحكيو على share split it will increase the number of shares. Okay, but it will be decreasing the par or the stated value per one share. Okay, so as we have seen here, when we proceed with the share the share split, so the number of shares will be multiplying, but at the same time the par value or the stated value will be decreasing. Okay, but if you are issuing share dividend, remember when you issue share dividend, so you'll be issuing what, or when you are distributing share dividends, meaning that you will be issuing more shares, so the number of shares outstanding of course will be higher. Okay, At the same time, this increase in the number of shares outstanding won't decrease the par value. That's really the main difference between both processes, okay? So when we issue share dividends, it will, of course, increase the number of shares, but it won't decrease the par value, but also it will increase the total par value of the outstanding share. كما I just illustrated هنا قلنا the total share capital ordinary, for example, if you distribute 30,000 as share capital, share yani dividend, it will be 130. For share split, it's still 100,000. Okay, so then of course, as total equity, it will be the same. But when talking about equity items for share capital ordinary, it will be different when it's about to distribute share dividend, and of course different from the share split issue. Okay. Is that clear, please? Is that okay, please? Okay, good. This is just snapshot on how we present equity. Really, this is just one way of presenting equity with the different items here highlighted. Okay, so you see here we got what? For this Frost SPA firm, we have the share. Remember, when we have preference shares, it should be what? Mentioned before, of course, any ordinary shares. Okay. علاش على خاطر ديما نحكيو نقولوا على preference shares that are more like obligations ولا debt more than, of course, investment as shares. Okay. Donc عندنا share capital preference. You see here 100 par value, 7% cumulative. So this is 7%. That's the dividend rate that will be distributed to preference shareholders. It is said to be cumulative. Meaning cumulative, meaning of course that if 1 year, for example, we cannot, for example, pay dividend in 2020, and now in 2021 we decided to distribute dividends. So for preference shares, they will have the right to accumulate dividends that were not distributed from the prior period. So they will be receiving dividends in the current period for those related to 2020 and 2021, of course, once there is a declaration of payment of dividends. We'll see that with the example, of course, well illustrated example. Here we have the number of shares that were authorized, issued, and of course outstanding. Okay, so that's of course for the preference shares. Kif for ordinary shares. So there is no par here, you see, but you got a stated value of 10 per share. 500 shares authorized, but only 400, of course, they were issued. We got also ordinary share dividend distributable. You see here. So that's, of course, the total for, let's say, the share capital, the total between preference and ordinary. And then you have the share premium for preference, share premium for ordinary. That's also the total for the share premium. And then we got the retained earnings. And you see here we have treasury shares. These treasury shares that will be reducing the total equity. That's why it will be mentioned at the end, of course, at the bottom within the bracket here. And we have other accumulated other comprehensive losses. That's an equity, of course, account. So total equity, summing up all of these items, we got this 12 million euro. Okay. So you see here, all of these details, of course, will be provided in this way in the balance sheet, but also we can have additional, let's say, explanation of this 7% cumulative, etc., in the notes, disclosure, or any part of the annual report when it is important, for example, to get or to give more details about dividend policy, etc. Okay. So this is the first here when we talk about comprehensive equity presentation. Okay, so here we just need to present these whole details about equity in the, as I said, the statement of financial position. Another also requirement regarding the disclosure information. So it's important that the firm proceed with what? Providing more information about any restriction given on retained earnings. So this is what I called in the beginning of the session when I talk about appropriated retained earnings. If you get, for example, any restriction from your creditors that is just forbidding you to distribute entire or part of your retained earnings. So if it is the case, of course, you should, if there is a problem, of course, you should, it's not a problem, but if there is such a restriction, of course, it should be disclosed, it should be, of course, informing in the notes disclosure about this restricted. Okay, donc كي تلقاو retained earnings for example with details with the notes, for example if there is any proportion. donc هنا كنرجعوا لل just imagine عندكم وين retained earnings of 4,360,000 عاش تنجم تكون تقول لك راهو عندي 2 million from the retained earnings, it is restricted to distribution, so it is appropriated because of course of this debt component etc with the other details. Okay,
is it restricted by the company or by investors?
Here it's not the investors. هو it is a requirement by the creditors. يعني أنا في الكونترا متاع borrowing, and this is just what I'm saying here, it is imposed by bond indentures and loan agreements commonly that is requiring here an extended explanation. يعني أنت when you just borrow money or when you issue bonds and of course you you get this bond indenture, so all the rules or let's say all the provision of this bond issuance etc stating that okay, you will be, for example, I will be lending you this, I don't know, $500 million, but at the same time you will be complying with this component, with this provision that you won't distribute I don't know 50% of your retained earnings ولا معاش this amount ولا حتى entire retained earnings. So as I said from the beginning, this kind of restriction, that's a guarantee to creditors in case علاش خاطر احنا retained earnings راهو هو اللي let's say the first one of the important, let's say, caution against losses. يعني انت وقت اللي you start increasing losses, how you absorb your losses. يعني when you record ولا when you incur a loss, يعني your net income, it is a net loss of I don't know 1 million. So what will be the journal entry هنا تذكر closing of course process اللي احنا will be debiting retained earnings and of course and closing of course the income summary to the retained earning with this net loss. Okay, donc هنا loss will be absorbed by retained earnings. So to make sure after all that the equity اللي هي of course building capital is not impacted by this loss. Okay, so this is a kind of guarantee for what? For creditors that if there is any problem, if there is any corporate failure, there is of course let's say a high percentage that they will get their money of course as soon as possible once, for example, the firm is starting liquidating, so it is guaranteed that they will be getting back their money. Okay, so these are restrictions, the type of restrictions that are common for any of course important money borrowed of course from banks or from other creditors when you just issue bonds and so on. Okay, راهو كنربطوها احنا what is important احنا in social sciences in general يعني finance ولا accounting ولا حتى all marketing or all of this stuff is that it is really intimately related to the reality. احنا في تونس تو كي نحكيو لك على لي بور بارلي مع الي ام اف والورد بانك اكسيتيرا شنو هما لي بور بارلي سي en quelque sorte on parle de this bond indentures يعني أنا I will agree to finance your budget, so to lend you money, but at the same time you should what? You should agree up in some conditions that you will, for example, you won't expand your budget, you won't make any wages increases etc. علاش هذا الكل؟ مش على خاطر خايفين علينا باش نفلسوا، احنا مفلسين ابري تو، مي هما خايفين على فلوسهم يعني يكون باش يرجعهم لي تو سامبلومون كي انت بلاد مفلسه وانت حالل في العريض. دونك تو سامبلومون you should what? You should not use let's say the little you have as funds, you should not use them in extra here payment يعني وقت اللي you are indebted, and of course the priority will be to pay back your creditors. Okay, so these are these restrictions, as I said, it must be of course disclosed. You got to provide this additional explanation, so how much it is restricted, for how long, etc. Okay, so all these details will be disclosed in the notes disclosure. And as I said, the source of the restriction يعني شكون اللي عملها, for example, it was for example bank, I don't know, the IMF par exemple, ولا any other institution, etc. The pertinent provisions كما قلت يعني للindenture يعني provisions of the contract should be of course disclosed, most important of course ones, and also the amount of retained earnings that is subject to the restriction, or also the amount that is not restricted. يعني انت you can say that you got this 1 million of retained earnings, you have for example 400,000 that is not restricted. So here we implicitly know that we got 600 that are restricted, okay, appropriated. Okay.
Yes.
Okay, good. So you know that of course one of the other financial statements that should be presented of course under IFRS, we have the statement of changes in equity. Okay, that's little bit not complicated but detailed, really very detailed of course statement of equity. Okay, so here we got all the details regarding the equity when we're talking about equity. So here you'll find for example information regarding what the number of subscribed shares outstanding. So you see here the number of shares outstanding. You have also the capital here subscribed, capital surplus. So here when we say about capital surplus, that's the share premium. That's here when نحكيو على share capital ordinary. That's the retained earnings of course in million of euros. You have also other comprehensive income. وهنا عندكم of course equity of shareholders. Of course هنا نحكيو على minority donc it's more about consolidation هذه issue etc. وعندك total equity. So here what's just important to mention is that you know here we're talking about the changes in equity. So whenever we have here for example you see here dividend paid, so that will be reducing retained earnings. At the same time we have also additional net income that was included. So the change here we got 30,120, so that's the new retained earnings of course compared to 28 etc. هذه of course the consolidation كما قلت لكم حكايه. donc it's an advanced topic, donc مش باش نحكيو فيه، donc تقراو في السينيور. You got the comprehensive also the other comprehensive income items. So هنا عندكم of course other expenses of course that are directly recognized in equity. So these other comprehensive items, minority interest, etc. So just to show you here that when we have to prepare the statement of changes in equity here, we have just to show what the equity at the beginning of also the period and the equity at the end of the period. Okay, so with this difference different items. So here the number of shares, the share capital ordinary, the share premium here, the retained earning, the other comprehensive items, and so on. Okay, so all the details will be provided. So that's the beginning balance. And then of course if you have any during of course any changes during the period, of course should be mentioned here, like there is payment of dividend, like there is net income also. Donc the net income of course of course the entire that will be of course to the mother firm, this base group you see here, and you have of course the minority interests which are 314 etc. Okay, donc انتم هنا شنو نفهموا of course اللي the total here net income it was 4,201 or 4,000. donc هنا bien sûr كي نحكيو على comment dire يعني c'est un groupe يعني d'entreprise يعني it's a holding. يعني you got the parent firm and you got their subsidiaries, and of course when you have let's say this important participation, so when you get more than 50%, يعني you will enjoy all the net income of the other subsidiaries, but at the same time you should not forget to give the minority interest. They're also part of the net income. Okay, donc عندك ما حبيش ندخل فيه details خاطر it's an advanced topic كما قلنا an advanced accounting that will be covered in the next year. Okay. So this is just also the kind of information that will be provided in the statement of changes in equity. You'll see so number of shares, the value of shares, and all the items that we just discovered. Donc هنا نحكيو على beginning balance changes for this account, and then of course the total. So that's the ending balance. Okay. Okay. The analysis a bit that you already know them from the FSA. So we will just take a break باش نرجعوا للappendix هذا. Okay, so we're talking about how we measure this cash dividend, etc. And of course when we get the different scenarios with preference shares and so on. Okay, so just take let's say 5 to 10 minutes and we'll be back. Okay.